Hey everybody, good morning. Wednesday, hump day. It's here, 8/5, August 5th, 2020. Glad to see you're here with me. 5:45 in Portland. Whoo! That's early. I hope we give Walter a little something good to talk about here. Somebody give me a knock knock here. Let me know that you can hear and see me just fine. And I'm sure they'll pop up here in just a second. There we go. Good morning. Waiting for a couple more just to make sure here. There we go. No, I'm in Cincinnati. You can't leave Cincinnati weather when it's in the 70s. We get highs of 70s today. We get lows in the 50s. You can't leave at this point in the year. You don't run away to New York to try to get away from weather like this. You stay when it's this. Hopefully everybody is doing well. If you're in the path of the storm as it bumps its way up the East Coast, I hope that you're good. Talked to DR last night. He sounded good. He was taking care of his father as well. So, hopefully this will pass, obviously. What a weird year. Doesn't everybody want, except for the market going up, I just want 2020 to go away. Let's just get out. Get rid of it. Get done. I mean, this is all right. You're not here to talk about getting rid of this. So, good morning to everybody. Thanks a lot for your comments and thanks for well wishes for the morning here. Let's get to the slides and start talking about what we're going to talk about. It's going to be a short one in terms of slides today because I think I'm supposed to talk about something. It slips my mind. Oh yeah, it's 3 and 3 on the biotech sector. That's exactly what it is. Everybody was, I got a lot of people that were asking me, are we going to do our 3 and 3, 3 and 3, 3 and 3? We're doing the 3 and 3, but first we're going to run down the pre-market news and moves. There's a lot of them right now. Everything, we've got the Dow trading just below 200 points higher right now when you look at the implied opens against the futures. Everything's kind of popping on. Obviously, we had some talk on the stimulus. Everybody turned around yesterday and said, hey, you know what? Maybe we need to get this done this week instead of saying it's going to be 2 or 3 weeks out. Maybe a little bit of a revolt among the working class like you and I, telling the politicians to get busy and get stuff done. Last night's earnings, we had some earnings that came out. Lots of them. You're going to see how many. I've got a service that pops up how many different companies are up and down in pre-market trading because of earnings. I'm going to show you one of the list, and it's only one of 4 that I had this morning, and you'll see what I'm talking about when we start talking about last night's earnings trade. I've got a couple trade ideas. One of them stuck in there, Disney. I looked at Disney. Obviously, Disney comes out with some earnings that are a little better than expected. They're doing things already to diversify their stream on the media side, Mulan, et cetera, but I don't think they're out of the woods yet. We're going to take a look at the chart, what you should do if you own it, what you should do if you don't own it. And then finally, we'll get to 3 and 3 in the biotech sector. 3 bulls, 3 bears in the sector. I'm going to go through the charts, give you an idea of how I'd be trading these, including a leap on one of them. I'm going through the yellow pad here because the yellow pad got filled up last night with all kinds of notes. I mean, 3 pages of notes. I was up until 1 going through charts and data, and lots of stuff out here, lots of stuff. So let's jump into it. Rundown of the market and the news. This is going to be pretty simple. We're trading higher right now. We're pointing to the S&P 21 points or 0.6 above fair value. As I said, the Dow's up 200 points. What drove it up? Well, first of all, the positive stimulus talk. Yesterday, Steve Mnuchin came down from the hill and kind of said, yeah, I think we're pretty far away from this, and we've been far for the last 2 weeks, and we're not getting any closer. And then all of a sudden last night, the Democrats said, you know what? Nope, we're going to get something done. It's going to be this week. July ADP employment change came in this morning, 167,000 versus a 1.6 million consensus. Tell me that's not going to have people scratching their head a little bit as the Friday jobs number is approaching more than or less than 48 hours. 48 hours away. This one's going to be a big one, folks. This jobs report is going to be a little bit larger. You know how I talked about the the earnings being the confirmation for the speculation. And certainly earnings have done that. Lowered expectations have allowed earnings to come in much better than expected. But at the same time, you know what? The jobs report is one of these that we've been looking at saying, hey, this is great. We've got a really quick comeback in the jobs market. Everybody's been touting it. Now all of a sudden you get a weaker ADP number. Dow futures dropped from being about up 200 down to 120, and then pop right back up again when we saw some other economic data come through. Watch that number. And also you got the revision to 4.3 million instead of 2.3 million. So an extra 2 million jobs. Where'd they find those? That's crazy. Absolutely crazy. So anyhow, Walt Disney has to be one of the big ones when we start looking at earnings. Up 6.7 in pre-market trading after beating earnings estimates. They added 60 million Disney Plus subscribers and announced Mulan's going to debut in theaters and on Disney Plus for $30. So I don't know if you're among the masses like myself, but I only did it for one reason. I got to go and see Hamilton with my daughter in Chicago with one of the traveling casts, and I joined up on July 2nd just so I could see Hamilton, the live version of Hamilton, on July 3rd, and Disney's going to probably drop out of my my collection here. But at the same time, 60.5 million subscribers. They're doing good on that side, getting the media spread out right now. Novavax is the other one, popping around, kicking, bouncing around like a BB in a boxcar. I don't know if anybody saw this yesterday, but yeah, they learned to count. That's a great one. They learned to count $2 million to 4 million, and somebody learned how to count. That's a pretty big lesson right there. So anyhow, Novavax all over the place, as there were some erroneous reports on possible drawbacks or some ill consequences or ill effects of their the vaccine that they've been working on in that phase 1-2 trial of its COVID-19 vaccine candidate. They're kind of behind the curve. The stock is up like 1,500% for the year, up 23%, and they dropped 33% after the market closed. I mean, it is literally all over the place. I don't even know what it was. A Super Bowl in a boxcar. Forget about a BB in a boxcar. It's a Super Bowl. Finally, Square reports their second quarter earnings. Knocked it. 18 cents per share, 23 cents better than Capital IQ consensus of a loss of 15 cents. Revenue jumped by 63.8%. We're going to look at the chart. This is when you want to play a leap on. Year over year, $1.9 billion, 1.92. Let's make sure I can count correctly here. Versus a 1.13 billion expectation. So Square knocked the cover off of the round ball here. And if you look at it, this is what my screen looked like this morning in terms of stocks gapping up because of earnings or other news. Typically, you're going to see about 5, 10, maybe 15 stocks on here. This morning, I had 43 stocks on one list, 20 on another. There were quite a bit. And for those of you that don't know, we have entered. Earnings season really is, people think that earnings season's that first couple of weeks of July and we're done. And now you've got companies like Square, obviously, that come out and you're going to, Disney's a little bit late to the show, if you will. GM Ford out of the way. Everybody thinks that earnings kind of go away. We're really starting to pick up into the brunt of the earnings season. And what it is, as you can tell by this list, is a lot of smaller companies, a lot of mid-cap companies. We get away from those large headline names, and you're going to see them every once in a while. Adobe's always late in the season. You're going to see them, but they're going to be mixed in with a number of others, and that's why it's important to keep an eye on the entire earnings season, especially when you've got something like this. And let me just pull it up. When you have the IWM that continues to go higher, telling us that investors are speculating. We're above that 200-day, very little volatility to that move right now. The IWM doesn't want to jump. It doesn't want to lead right now, but it's actually starting to get a little bit of traction here. The small cap and the mid cap companies are going to kind of take over the earnings show here for the next couple of weeks. And that's going to give us a little bit more of that confirmation, because remember, speculation needs to have confirmation. Confirmation. That's what we're getting here. Some interesting names here. Match.com up 1.9%. Love the ticker symbol. We've played this many times in the night trader service and have had winners on it. Humana up 2.8%. You can see there good numbers from them. Let the cat out of the bag a little bit. Model N, MODN. That's going to be your fast profit stock of the week. For those of you that look at my fast profit, that is the stock of the week. You'll get a little more detail on that either later this afternoon or tomorrow morning. Don't tell anybody that I'm letting the cat out of the bag, but that is the stock that I profiled. Love the company. Love it. Look at the earnings. It just great company. I'm spending too long on this slide. Let's jump into how you trade a few of these. Square. As I mentioned, beats by 23 cents, beats on revenue, just blew the numbers away. I mean, they did a really good job, and why wouldn't they? They represent not only the at-home businesses, because you can use Square when you're on your Etsy account, your eBay account, you get with PayPal on your eBay account, but you can use Square if I have a friend who has a flower truck that pops up all over the city. This cool, really cool 56, I think it was, Chevy. That's just a bad truck. But she's filled it up with these awesome flowers. She goes all over the city, does pop-ups. She uses Square. All the small businesses using Square. My mechanics using Square. No wonder they're gone parabolic here. Shot up from 55 to 135. Now the stock, if you look at it pre-market as it's traded, let me get the closest quote for you. It's a little hard to say. When you look at Square trading ahead of the market, up 12%. Trading at 153, so it is way up here. How do you trade this stock? How do you trade the stock? Well, I can tell you that Square right now comes down a little bit after their earnings beats. This one's a big one, though. I got to admit, this one's a big one. 150 is a big, huge poke here, and I think you'll see the stock as we've seen so many. I mean, I can name a number of them. Opco is one that's come back down after their earnings. You've seen a ton of companies that have come down 10, 15, maybe 20%. I don't expect to see that much activity out of Square. I'm trying to get to it, but I'm looking at the January 140 calls on Square. That's how you play this. And the reason you go out with the Jan on this one is because the next quarter is going to be just as good. If we continue to have reopenings in the country and we don't get clamped down by the coronavirus, you're going to have these openings. You're going to have people doing more things that are out pop-up style, whether it's dining. We have a lot of pop-up style dining that's coming around Cincinnati right now. Small businesses are going to rule as long as they stick around. And Square is going to benefit from them. You can wait a little bit because the stock is getting ready to go overbought on us as it gets up into that 70 level. But you can see that when the stock has gone parabolic on some of these moves, you miss out on a 30% move. My recommendation is you jump into it, even though it's trading around 150, give it a little room to come down to that 145, 140. Then you're at the money on the Jan options. They're going to be a little expensive. Do a vertical spread if you like. Go ahead and do the 140, 150 on that. It doesn't make that much sense if you do it at that level because you want to go a little further out of the money so you get that upside potential. But take a look at Square to January options. Next one, Disney reports 8 cents per share, 72 cents better than S&P Capital. They thought they were going to lose 64 cents. They were going to lose 64 cents. And let's face it, company takes a lot of money to run. Revenues fell 41% year over year, and they're expecting it to go down even more when they talked on their conference call. 11.8 billion versus 12.48 billion expectations. Stock's been trading sideways. This is one of those zero-line flatliners that have gone just kind of along the way of Carnival Cruise Line and Royal Caribbean and a lot of the airliners. A friend of mine just jumped on a flight from Cincinnati to Delta this morning. He's on the plane right now. It's probably 9:15. I think it takes off. He's flying to San Francisco today. He's all respirator. He's wearing a respirator, not just a mask. He's got a respirator on. He's all respiratored up in the back row. Said the flight was actually full. But anyhow, these stocks have been going flatline on everybody. Flatline, zero volatility equals no opportunity. Right now, Disney looks like it's going to stay the same way. You can see that it's tightening up its grip on that 120 mark right now on the stock. The stock is trading a little bit higher on the news of the earnings beat. And let's keep in mind, Mr. Neat down in Florida put it best, and this is one of those rules that I always follow when you look at the market. Expectations are everything, and the expectations were set especially low for Disney right now. It's trading up $7 at 124, so it's going to take it right up to its 200-day moving average. We've seen resistance there. If you own the stock right now, you look at possibly something else out there that's going to move around a little bit better. There's some restaurant companies that are doing much better right now than Disney, I think, is going to do. And I'm not talking about Chipotle. Chipotle's obviously gone kind of parabolic on us, and it's going to continue because they figured out not only how to handle the safety, and let's face it, Chipotle has been through this before. Not necessarily with the coronavirus, but other viruses. So people should be flocking to the Chipotle, knowing that they know their kitchen safety. But at the same time, if you look, Darden now is starting to break out. People are going to the Olive Garden. They're going to Red Lobster. It's trying to break up above that $80, still in that flat line. I wanted to break out. BJ's Restaurant has done a breakout. There are a number of these companies that are starting to, Bloomin' Brands is starting to try to break out of this zero volatility zombie walk here and not really getting out. So my point here is these stocks are still under that COVID-19 shroud that's going to kind of keep them moving sideways, and you need to find activity elsewhere. Retail has been popping a little bit. One of my favorite that I love, just because I love to say it, Boot Barn came out this morning with earnings. The numbers, were better than expected. Everything's better than expected right now. It's like all the students are bringing home A's and B's instead of D's right now. Stock's trading up 10% at 22.50 right now. Going to take out that 50-day moving average. I think Boot Barn finally picks up a little bit of steam here. Got a couple downgrades this morning. Maybe trades up to that 30.29 level where that 200-day moving average is, just like it did in June. People are getting into not only the retail, but this gets away from the idea of just being, your American Eagle Outfitters, which is going to be more of a school type of retail. Obviously, doesn't get as close to home as Dick's Sporting Goods, which we still continue to like. That stock going back up towards its 46 print. We actually closed out of our night trader trade when it traded up to that 48 point, and it's starting to look attractive again. Dick's Sporting Goods with the golden cross here as well. I'm throwing a lot on you guys this morning. I hope you're all right with that. 2 cups of coffee, like I said, up until 1 doing charts. So let's keep it moving forward. I had to get a little bit of coffee there. Disney, if you got it, you can hold it. I think your money is better elsewhere. Boot Barn holding, just went through it, so we don't have to. Think we can trade up. We're trading above the 50-day right now. It's going to go bullish. You've got $28 as your top on Boot Barn. It's a tradable retail right now, a tradable retail. The analysts typically love Boot Barn. Right now, we have seen some downgrades on it. I think that you see it maybe run up to the 26 level, and then it reverses. I don't think it makes it to the 200-day. Still gives you a trade, though. So let's talk about what everybody was making sure I talked about here today. Sector disparity. And I'm starting off with a little broader thing here, but I wanted you to see this chart because this is absolutely stunning. This is as of July 1st, 2020. So year to date from December 31st until July 1st, halfway through the year, and this is where all the sectors lie. I've never seen if you will, a layout like this, where your top performers are up 27% and your bottom performers are down 55 and 44%. And if you look at this, the number of sectors that are performing at 20% or less, so right below this line, we won't even count that 19.8, even though we should. Now, I'm going to throw it into the, because we're talking about math and doing math and counting right. We're rounding that up to 20. So you've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 that are trading above 20 or above losses at 20%, and 1, 2, 3, 4 that are above. Trade on Boot Barn, Renee, is look at it to trade up to $28. You leverage that either by doing the option, using an option on it, and you go with the September option at this point. You don't fool around with an August option, and you go at the money, and you're going to make a 25-30% on that move. And don't wait for the 200-day. And that's not to Renee specifically. That's just in general. I should have been, because obviously I can't give individual investment advice here. But the question's asked, what's the trade on Boot Barn? It's to play that move from the 2250 up to the 28 level or so. And the best way to do that is with the option, or go ahead and do it with the stock. It's a $24 stock, $22 stock. Anyhow, back to my discussion here. You got a 4-to-10 ratio of sectors that are outperforming and underperforming here. Never seen this in the middle of the year. Never, ever, 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 ever seen this. This is one of those situations where if you try to put together a statistician like myself or somebody who likes math is going to look at this, and we start to talk about kurtosis and the fat ends of the tail. Man, this is nothing close to a bell curve, a standard bell curve at all. It's not normal in terms of distribution. There's your S&P 500. This was as of last night, up 2.5% for the year. Your NASDAQ 100 is up 27% for the year. Your oil and all of those are down 50%, 40%. And then you get into the regional banks that are down 36%. These are some of those zombie sectors that are just not going to go anywhere anymore. Zero volatility. These are where you need to be. Notice who is up there in the top three. Biotech up 19.4%. That's why I brought up on Monday, I want to look at the top three and the bottom three. And these are my top three and bottom three. I'm not looking at the performance year to date and saying, well, this company did 200,000%, yada, yada, yada. You can't do this, especially in the Robinhood era right now. There's your XBI performance. Just bounced off the 110 level, 50-day moving average. Looks like it's going to try to take out the trader's trend line. There's been some disparity, though. If you look at this, and I should have done the same thing for the biotech, except there are 122 companies that make up the XBI. But the distribution of performance is similar to this. Huge winners, huge losers. How do you play that? You can play the XBI if you like, because a lot of the companies that are the winners are up in the top ratings, the top weighting of it. And that's why you still have a nice, strong performance. For the record, 42% of the sector is trading with a bullish trend. So a little bit of half, but a lot of those are flatlined. You guys want to see the ones to buy and the ones to the sell, though, or at least short possibly. So let's start with Verisight. Not really a biotech company, more of a healthcare. They do a lot of their business really is on the diagnostic side, especially with genomes, human genomes, but it's still considered in the biotech sector. One of the outperformers here. The stock just announced its earnings, shot it back up to $36. This is kind of like what you've seen with Opco and with a few other companies. When you come out with that good news, you get that pop higher, and then it immediately comes down. It's down 8.3% yesterday to 32. I like picking up the stock at 32. If you can grab it at 32. Verisight right now, my target for it is $46. It's weird for me to have a 46 print instead of a 45 or a 50 or a 47.5 because of the options. But when I looked at it, and the model that I use, the technical model that I use, actually said this is where it's going to go. This is right now where it's got an 85% chance of going here over the next couple of months. Now, that earnings, when you look at it, you got that earnings pop above 35, took it out. Some shorts got it out of the way, and that's why you saw some volume come in. And if you look at it, the stock came off of that overbought reading, opening up some room for it to move higher. When I look at Verisight, this is one of those that I like to play a little bit of a longer term option. Don't necessarily go out to January because they don't have them trading, but the December 18s right now are trading. And if you look at the December 18s, you can either go with the 35 or the 40 on the call side. And those, when you look at them from yesterday's side, trading, it's a wide margin on this. You got to make sure that you use a limit order on these type of trades because they're thin right now. But I'd be looking at the 35 just to get it in the money as soon as possible here. And you're going to get a little bit of an evening of the spread. Verisight bullish in the XBI. That's number one. Opco Health. I've already said the name twice right now. And the reason that I've said it is because this is one of those companies that came out with earnings and the company just plummeted. It came right back down. Why is that? Expectations were high. They delivered. Here's their earnings date. After the close, they announce their earnings. They shoot down to the $5 level. You can see the 20-day, the trader's trend line is moving there. Opco Health turns into a buy on that bounce off the 20-day. Got a target of $8 right now on Opco from that 525. The stock is trading flat right now pre-market. Pre-market, it's up 4 cents. 3/4 of a percentage point, which actually 4 cents and 3/4 of a percentage point is good. I like to buy below 550. And in the case of Opco, if you start to look at the options, you look at the sixes, in this one, again, I go out to either December or there are Jan 15s available on it. These are longer term plays right now. Why? Because there's a lot going on in the biotech sector, a lot of attention towards the biotech sector. When you look at Robinhood and the investing there, and I like to say that they're slingshotting things higher. They buy it and then they sell it, and then they buy it and they sell it. Well, that volatility, you need to be able to play it out a little bit better. The longer term picture on Opco is bullish. I continue to like the earnings that I see from the company. For that reason, 5 of your 7 adult kids trade high-tech stocks. You know what? Everybody's trading the high-tech stocks. Yeah, give me an example of those high-tech stocks. I'd like to see a sample of maybe the 3 or 4 that comes off the top of the head. Is it Apple? Is it or is it a company that's a little less known? And a lot of the Robinhood investors get into the less known because they get their little Robinhood snacks and because of the social networking here. So Opco, number 2, and then Ultragenics Pharmaceuticals, RARE, the third out of this. You've got a company that obviously pharmaceutical based. The company announced earnings 3 days ago. That's the little pop that we got right off of here. 50-day moving average came into play at this point. 94 print is what I've got for a target on RARE. This is one, again, if I'm looking at the options and I just look at them from my experience and how I typically play these, I look out at the November because there are no Jans, there are no Decembers. So I'm going to play a little bit shorter. And when I look at rare, I'm going to go with the 85 and try to get that move that's going to take it up to that 94. Those are trading a little expensively right now. They closed at $14 yesterday. When you look at that 85 call, the stock with volatility like this is going to make you pay up for that volatility, and you've got 3 months on that expiration. So for this particular one, I look at it from the perspective of get in the money on it as quickly as possible with this volatility playing out, and let that volatility ride it up to that 94 price target. Look at maybe that spread as well with a $14 option. Nobody likes paying $1,400 for one contract. I mean, the midpoint on the damn thing is $1,240, and this is using yesterday's close. So you had an ask or a bid at $1,070. Take a look at that and maybe try to spread that out a little bit. Look up at the 90s, maybe even the 95s here. But obviously, you can take a look at that as another bullish. Bearish, on the other hand, Radius, pretty well-known name. Stock used to be trading up around the 20 level, continues to disappoint in terms of coming out with product pipeline right now. And this is Radius Health. Earnings have been just continuously since really last year. You saw a report from them August last year that gave you a little bit of a bump in the stock, took it up to $24, and has been disappointing since then. Year-over-year revenue continues to slide, missing estimates. Stocks right now in the middle of that trend line, that trend on the RSI coming down. When I look at the monthly chart on this as well, it is trading in a bear market against its 20-month moving average, which is camped out up here at the $20 level. So in this particular case, this is what I'm looking at from the perspective of the stock is in a bear market. We continue to see analysts upgrading the stock. At some point, that has to come down. Radius, one of the poor performers, and one of mine to avoid in the sector. Another one's going to surprise some people. Biogen, BIIB. This is getting into large cap biotech stock area. A lot of these mid and small cap companies, but in this particular case, you look at Biogen, and it is a situation where the long-term technicals on Biogen continue to be bearish. When I look at it, BIIB, the ticker symbol there, when you look at the 20 month, not the 20-day, we're in the process of breaking below that. It is at right about 275. So we're right now battling it out with the 20-month moving average. And you can see the support that you've got here that seems to be for no reason. That's because the stock is getting ready to go into a long-term bear market. Once we crack through that 275 level, you're going to see an acceleration of the selling as you did here in June. Stay away from Biogen, and this is one of those that you want to look at as a possible short. Options are going to be a little expensive, but at this particular point, Biogen right now has a downside to 220 according to my charts. 220. And then finally, Ironwood Pharmaceutical, IRWD, rounds out our 3 to avoid or short. Got a target of $8 on the stock. You can see the 50 and the 20-day moving average coming into play on Ironwood. This also trading in a bear market. I didn't break out the number of stocks that are breaking. $11 is where the 200-day moving average is, and that's also where the 20-month moving average is as well. So those are your 3 that you want to avoid, and then you've got your 3 that you want to play. Folks, the list that I've got in front of me when I started looking through charts last night is long and distinguished. We've got some good names here. Some very good names, and I'm going to share some of these obviously with my my night trader people this morning. We may just go through all these charts, guys, my night trader people at 11. In terms of earnings trades, I'm putting up another earnings article on moneymorning.com here in the next couple days, so some good stuff coming through all of this work. Hope that you guys can, kind of appreciate that. You know what? There was one that I did want to point out, and maybe I'm going to hold off on it actually, because we'll talk about it tomorrow. Match.com was one that I did want to bring up, and I mentioned MTCH company coming out with their earnings yesterday. How do they not make money in this environment, I guess, is probably the question. It is people need to meet. So the company is, they're doing exactly what they're supposed to be doing. They're bringing people together. I'm not using it myself. I prefer to, meet somebody while I'm walking the dog or doing something crazy like that. But you know what? Match.com comes out, and this is a company that much more history, obviously, than the chart shows from the spinoff. But at the same time, the company has been proven in terms of not only this environment, but its long-term track record. You can't see the technicals here. I'm looking at Match.com to head its way back up to $130 here. Love this stock, love this trade. It plays out with the pandemic. Gold exploded. You're right. GLD closes at its highs here, goes over $2,000, or gold, the actual gold. We've got orders in to buy some. Actually, we're into El Dorado Gold, EGO, in the night trader portfolio. I'm expecting this to make a nice run of $14 here in the short term. El Dorado's doing great for a smaller miner here. There's a couple of others that I've been looking at. Barrick Gold is the other one that I often mention when we start talking about gold. You'll also see that you got a little bit of pullback to the 20-day there. Now the stock's threatening to break up above the 30. Let's take a look at the VIX, because that is an important, and especially with futures up right now. VIX is closed down at that 2330 level. Direct down again, doing a little bit of zero volatility walk. Yesterday, it was very interesting to watch the VIX, and I can pull up a chart and show you. Let's look at the 5-minute chart of that. The VIX tried to pop, even though the market was right here, right around that. This is, what do we have? No, I'm sorry. We're right in here, which was right around going into the close. Here, we see another pop. 24 has been that spot where we don't want to close below 24. The VIX has been very sensitive to the 24. The fact that we went down to 23.31, it's going to be interesting to see. When you see moves like this, when the market is up, it's telling you that there's something funky going on with the S&P 500 options right now. And you're seeing that volatility even this morning with futures trading higher. VIX, the implied VIX, trade right now is moving a little bit higher than the close, or moving back up to the close. Watch the VIX closely today, because this is going to be a situation where the volatility is going to play out here over the next month or so. So that is one of those trades that you want to be on the right side of. Let's see if we got any questions and answers here, and then I'm going to jump over 6 of these. Great. Still holding on the VIX, absolutely. What's with the VIX? The VIX is getting smashed down. If you look at the financials, they continue to go sideways, along with a lot of. I mean, as you saw, if we go back to that sector view, a lot of the sectors in this market's just getting smashed sideways, and that brings down the volatility. So the VIX is going to get that pop. It could be because of the July jobs report. I'm going to kind of segue into that or dovetail that question. I don't put a prediction on the jobs report. I'm not an economist. I'm not going to try to be an economist. You know, when you look at Steve Leisman on CNBC, he's got something that's got 7 different indicators that he looks at. I just look at the number that comes across the screen at 8:30 and how the market reacts to that, and that's how I take my lead. I'm certainly not going to try to, especially in this market. I think you're going to see a drop in the jobs. If I did, you know, somebody held the gun to my head and say, hey, you got to make a choice, I think you're going to see a little bit of a change in trend, or at least a blip in the change of trend from what we saw last month, because obviously we're dealing with a situation that you're out in the Six Sigma world here in the changes in the jobs market right now on a regular basis. I do know I see all kinds of help wanted signs out there. So people are looking for help. It's probably not the job that people want, but at the same time, I think that we see the jobs report probably disappoint. Camping World Holdings, how do you handle earnings tonight? Sell before or hold a call option on it? Let's just address it from the stock. So I'm not talking directly to the call option side of things here. So I've been burned myself, and AMRS was a good one. You know, I can list them. XPO was a great one. We're up 25%. I was literally putting something together for my Night Trader subscribers. Hey, let's get out of this ahead of earnings. And the stock dropped 13% the next day. I did some studies to follow up on it. It's telling me that the stock should continue to climb higher, and it's climbed higher a couple percent each day. The reason I'm telling this little story is, first of all, you know, you don't know what's going to happen with the trade. XPO looked like it was going to go higher. Camping World has been on fire. So I look at it from the perspective of, would I miss, am I willing to miss out on 10% upside in order to possibly miss out on 10% downside? I think that's the kind of move you're going to see from Camping World Holdings. The stock has been in the headlines. Look at Brunswick, look at a few others, you know, that have come out that are in the same sector. So Brunswick came out with a big number. I mean, they really nailed it. And look what happened. We get the sell-off here. So I think you look at this from the perspective of, is this stock priced for perfection? Is this stock priced for an absolute huge report? And when you look at it, last time they announced earnings, they're now up 281%. It's pretty hard not to look at that and say, take some profits off the table if I own the stock. Well, full disclosure, I do own the stock. But if you look at this from the perspective of, can I give up 10% of that 281%? That's a drop in the bucket. At the same time, you know my sawtooth method, I'd like to have a stop loss in and then buy it at a different point. So the way I would play this with the stock is, if I do again own the stock, likely to close it out ahead of the earnings myself and put in an order to buy it back at 34 bucks. At 34 bucks, I get it. My gosh, I get a deal on that stock. That's like going to Ollie's and buying a book, one of their books. I get a 16% discount on that price. I like that move. If it goes up, it's going to come back down to 40, and you'll get a chance to pick it up right back where it was ahead of earnings. Love this stock. It's a stock you hold through the third quarter here as well. Let's look at a couple other, and then we're going to have to get going. We've only got 3 minutes here. Target, BioMarin, so let's look at Target right now. Costco took a nice jump yesterday. Did everybody see that? Got upgraded from Telsey Advisory Group. Dana Telsey, retail genius analyst there. Up 3%, kind of broke out of this lackluster little bland move it's been in. Watch Costco, watch Target. Walmart actually announcing this morning they're going to put off their little membership that they were doing through the Walmart stores. Like the fact that Target's bounced back into a bullish trend with its 20-day confirming that. Target also is looking forward to people going back to school here. I think this plays out until Labor Day or so, and then you start to see some weakness in the trend. I don't think you buy it at the 130. Let me see where it's trading ahead of the market open. I think you don't buy it at a full 130 because it is overbought at that point, and it's flat at the market open. But maybe a 125 print on the stock gives you a nice limit into it. And you get that triple top, boom, 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 that starts to turn in support for the stock. So I like Target at that point. Pfizer coming out with some news. They've got a couple of drugs and making it through their stage 2 trials. Their announcement there, $39 has been the bane of its existence. Double top here at the $39.39. We've got Pfizer trading this morning. And this is one of those, the pharmaceutical companies, it's funny, Pfizer and Merck and a few others, and Merck is kind of on the other side of this. Pfizer's only trading up 0.5% right now. You look at Merck right now, and a company that should be absolutely probably slamming it better than this. And what's happened is the attention's gone away from these companies. AstraZeneca's picked it up because of their work with COVID-19 and possible production of the virus, or the vaccine there. I think that Pfizer and Merck are companies that will continue to be in a, not a quagmire, but kind of go sideways, while the smaller biotechs are going to remain in the crosshairs of the traders for right now. Whew. That takes us 929, guys, which by my record, XBO is still a hold. Yes, we got another 2.5% out of it yesterday. I like to continue to see the as long as I continue to get support from my quantitative study on it. Yes. Love the 250%. Love that call out. Prepared to buy the dip if it happens. It's exactly the way to go. I mean, you buy these sawtooth rallies, guys. Another one that you look at, CJ or anyone else, you can contact me at #1 Air Source, Melbourne or Cape Canaveral, Florida. I need a little detail on that. I'm not sure what kind of cryptic message you got that in there, old Yeller. Oh, let's look into SLV. Silver actually taking through the, this will be the last chart. Silver taking it through the roof again today. Pow! Up to 25 bucks. You know how I feel about buying something that's overbought like this. Silver's proven that it can continue to go higher. I don't think that you buy it at the 25 bucks it opens at today. The stimulus package is what's doing this. Stimulus package back on. Gold, silver are going to go through the roof. Dollar's going to go down. That's a fast profit trade that we had a month or two ago, and that's the one you stick with right now. Silver and gold. Cornelius will be happy. You hold them until you see the movie with the Bumble, which is going to be December or so. I think that's the way that trade plays out. And if you need a way to remember it, I just gave you a great way to remember it. Just sing silver and gold, to remember old Cornelius and what he was always looking for. And that's what you hold through the end of the year. That's going to be it for now, guys. I got to go and start putting stuff together for my night trader people. I'm going to see them at 11 o'clock. Looking forward to seeing you tomorrow at the same time. Hope you have a great trading day. Wishing you the best trading success. We'll figure something easy to go through tomorrow. Have a great day. Talk to you later. Bye-bye.